All right, let's continue. Okay. So the next area is answering questions on audit procedures. Audit procedures. Audit procedures. Audit procedures. My screen up.
Yes, it is.
Okay, good. So questions on audit procedures, similar to the other areas we've looked at, can be examined in different ways. Yeah, in different ways. In different ways. So we have here some examples of extracts of past questions. Okay. Design principal audit procedures which you will instruct the component auditor to perform on the sale.
I'm not sure if you're in presentation mode yet. I'm not sure if you're in presentation mode yet. So what I see is the first slide and the other ones on this side. So it's just like you're not in presentation mode. That's what I see. I don't know if that's why I wanted to.
Okay.
So you're not on screen. I was like 19.
Oh yeah, I am actually. It's just not. Okay, so it should be fine now. It wasn't just updating. So I'm sure you are still seeing slide 18.
Yeah, so we're on audit procedures now.
Yeah, but it's blank. Same. All right. Yeah, it's there. Okay, so as I was saying, that you will instruct the component auditor to perform on the sale of property to the group chief executive officer. So perhaps the component has sold a property to the CEO. What audit procedures will you instruct the component auditors to perform? Now, this is 6 marks. Generally, it's 1 mark per procedure. Okay, so you have to give 6 procedures. And here is disposal of property. That is the subject matter of the audit procedures. Design principal audit procedures to be performed in respect of classification of $48 million of investment in Pepe and the government grant of $20 million received. Now, what do I want you to note here? Number 1, you will need to give 4 procedures each, okay? Because there's 8 marks. Number 2, take note of the difference between C1 and C2. In C1, there is a restriction on the assertions they want you to audit. Specifically, the examiner says classification of investments, meaning I don't want you to audit measurements. I'm not interested in you auditing presentation. I'm not interested in you auditing existence. Tell me, has it been properly classified? Should it be joint arrangement, subsidiary, associate, or whatever? But if you look at C2, it just says government grant received, meaning every procedure you consider necessary, you can reflect on that. In another past question, they said, what audit procedures will you perform on the conditions attached to the government grant? Conditions attached to the government grant. Meaning the examiner is saying, before you can recognize government grants, there must have been certain conditions that the entity must have demonstrated that they have met. One of which is there's reasonable assurance that the entity will meet the conditions attached to the grant. So here it's more open. Let's look at B. We're talking about scoping your requirements now. Design the principal audit procedures to be used in the audit of 1, the impairment of the factory, 2, the development cost capitalized in respect of the new packaging they have. So you can see diversity of procedures. These are not basic procedures. You know, these are procedures that you must know what you are doing to be able to give solid answers. Impairment of factory, you have to understand the broader rules of IAS 36, but it's not just knowing the standard, it's how to verify those requirements of the standard. Development cost, you have to know the broader rules of IAS 38. Not just knowing the standard, it's knowing the requirements of the, how to verify the requirement. You have to know IAS 20. It's not only just knowing what IAS 20 says, but how do I audit it? You have to know the group accounting standards. It's not only just knowing the group accounting standard, but how to audit it. Design the principal audit procedures to be used in the audit of goodwill arising on the acquisition of Links Co. You do not need to consider the procedures relating to impairment testing, foreign currency translation, as this will be planned later in the audit. In some diets ago, this was a mock exam that I gave. You won't believe candidates still said audit procedures for goodwill related to impairments. Despite the, you do not need to. Okay? So please don't make those mistakes. Someone needs to go on mute. So to audit goodwill, you must understand the accounting requirements for goodwill, IFRS 3 and Co, to be able to know how to audit it. So that then takes me to say, what then do I do to be able to answer questions on audit procedures, knowing that it will come out every diet? The answer to that question is broad. Okay, it's broad. As you can see here, they can ask you to audit anything. That first one might look easy, sale of property. Well, maybe it's actually easy. But the fact that it is sold to a related party, which is a key management personnel, may require that additional procedures may be carried out related to the fact that it's sold to a key management personnel. Okay? It is impossible to give you any list of procedures that will cover all possible scenarios in the exam hall. In fact, it is impossible to do that. But it is possible to tell you your sources of points and your structure of answers. So just a gentle reminder on those two things: structure, sources. We normally use the framework called ASP. A stands for the action words or the verb. So it can also be VSP. S stands for the subject matter that you are subjecting to an audit. P stands for the purpose. Some people know the procedure to carry out, but they don't structure the answers appropriately. That is why this is important. ASP. So I take that again. If I am to pick an example of impairment of factory, and I'm to carry out audit procedures on impairment of factory, my expectation will be that maybe management has done something, right? Obtain and recalculate management's impairment assessments performed on the factory to confirm arithmetic accuracy. Obtain and recalculate there is what? Action, verb, doing word. This action, this verb, there are 7 types of it. How many types do I say we have? 7. So let me remind you, types of action procedures. Actually, types of audit procedures. But I hope you understand what I mean when I say action procedures. There is inquiry. So all the inquire of management, request, ask, obtain. There is inspect. So I could have changed this one to obtain and inspect, obtain and recalculate. Recalculate is also another one. Another word for inspect is review. Okay? So you can say review, you can say inspect. You can say confirm, confirmation. You can compare. So, for example, when you are doing analytical procedures, you can also agree. I'm using some of these words are used interchangeably now, but I think I'm just giving everything, okay? You can observe. You can also do what? Reperform. Management impairment assessment here is the subject matter. That's what you are subjecting to the audit. To confirm arithmetic accuracy is the what? Purpose. You see that? I'll give one more example. Review the assumptions underlying cash flow forecasts used for value in use, e.g., revenue growth rates, vis-a-vis your knowledge of the business / industry to assess the reasonableness of such assumptions. Review there is my starting action. Assumption underlying growth rates or value in use is the subject matter that I'm subjecting to an audit. So that's the S, A. Reasonableness of such assumption is my what? P. Purpose. So that's structure. I'm sure the point is clear. If it's not clear, you can ask questions. So someone says, obtain and review minutes of board meetings. Purpose, the person did not put. Confirm that the entity have the intention to sell the assets. Confirm is there. Purpose is there. What's the subject matter that you will use to confirm that they have the intention to sell the asset? It's not there. When another candidate is saying review announcements, newspaper adverts, publicity performed by management as evidence that the entity is committed to the planned sale or the entity is actively looking for a buyer, you have to state the subject matter. But beyond stating the subject matter, you have to state the purpose. But it is possible to know the structure but not know the content. Okay? And this is why we say the most important thing, I say that again, the most important thing to know, to design relevant procedures are the audit objectives you want to achieve for that area. That's the most important thing. You ask me to review impairment of factory, I first of all think, what are the objectives that I want to achieve related to that impairment? There is no better thing that captures specific audit objectives for specific areas of the financial statement other than assertions. So, to be quite honest with you, all students are actually supposed to know relevant assertions related to relevant items in the financial statement and be able to know how procedures can be designed to audit each assertion. You want to check for the existence of something. For example, you even want to know whether there is an impairment indicator. Maybe that factory they are talking about, the reason why they are saying there should be an impairment on it was that there was a natural disaster which destroyed some part of the factory, or there was a fire, or whatever it is. Part of verifying existence of an impairment indicator will mean that you have to do physical inspection. You want to do valuation assertion for that factory as part of impairment testing. Obviously, you need to get valuer's report that shows how the fair value less cost to sale of the factory was determined and how much is it. And is the expert qualified and objective to do such work? You want to verify, completeness or accuracy of the amount. You need to even know this factory, all the asset attributable to it as a cash generating unit, have they been allocated to it for the purpose of impairment testing? If the factory is making use of a corporate asset is an asset that is of use to several cash generating units. If a factory is using certain assets, you are expected to allocate part of those corporate assets to that factory before you compare it with its recoverable value. Part of checking valuation assertions is to check the projections, the value in use projections that the entity has come up with. As an auditor, I want to check one of my objectives. Even if you can't capture your objective as assertions, capture them as audit objectives, the way you think is reasonable to do so. At least as an auditor, you know that one of the things you want to check regarding impairment of factory is those projections that they have there. Are they reasonable? Which is what I wrote here. But are they also supportable? So I can design a procedure where I will agree those revenue projections to customer contracts. Those customer contracts may be 5-year contracts, maybe 6 years contract, maybe 3 years contracts, which demonstrate that yes, at least we have this contract. It guarantees 75% of our revenue. We only need to fight for the additional 25%. And we think we can do that based on the fact that you can also see we have increased our advertisement budget. You can also see that we have entered into an alliance with this other company. This is the contract of the alliance and things like that. You compare the projection with the budget. Is it consistent with, because budgets are usually more realistic. It will be approved by management, by the board. But this projection they've used for impairment assessment, is it consistent with the budget for that area? There is no audit procedure you will not be able to design as long as you understand this structure that I've taught you and you understand the concept of my audit objectives for that item. And as long as at least you have averagely prepared for your exam. So they've asked me to audit this thing. What? They've asked me to audit classification of investment in Pepe. Why? What was my audit objective for auditing classification? The overall objective is, should this thing have been associate, joint arrangement, that is joint venture or joint operation, whichever one it is, subsidiary or ordinary investment? Then you start asking yourself probing questions. Okay, if it's supposed to be an associate, what's the question? If it's supposed to be subsidiary, what should have happened? If it's joint arrangement, what should be in the contract? Okay, I will obtain this to review this because it will help me with this objective. I will obtain this to review this because it will help me with that objective. So Think of the assertions, because the assertions, or if you don't like the word assertions, then think of specific audit objectives related to that area. Specific audit objectives related to that area. I need to move fast now. Think of requirements of relevant IFRS. So one of the things that may help you understand the relevant objective is what the standard says. What the standard says. In that question, for example, they say, what audit procedures will you perform on goodwill arising on acquisition of links? I must know what the standard says about how goodwill is measured for me to start designing procedures that will target that. Because even compliance with the relevant accounting standard is an audit objective. Oh, the standard says that contingent consideration and deferred consideration should be measured at fair value. I need to design audit procedures for that. Oh, the standard says that anytime there's an asset is measured at fair value, deferred tax implication needs to be considered as part of goodwill. I need to design an audit procedure for that. Oh, the standard says that asset and liabilities acquired should be measured at acquisition date fair values. I need to design a procedure for that. Oh, the standard says that if the entity has contingent liabilities, even those contingent liabilities have not been recognized, for goodwill purposes, they should be recognized as long as you can fair value it. I need to design, I need to inquire, does this subsidiary, this link co, have contingent liability in their books? What's the basis for valuation? I need to design procedures for that. Oh, the standard says if the company have unrecognized intangible assets, because you have now paid for, you have now acquired the company, such unrecognized intangibles can be recognized separately. I need to design a procedure for that. But where do I start if I don't know the standard? You can ask your question.
Okay, thank you very much, sir. My question is this: is about this area of the IFRS standards. Are there specific standards that you've noticed over time that are applicable to AAA? Because the standards are quite broad in terms of requirements. So I don't know if there's any aid, like are they like specific about 10 or 12 or 15 that have occurred over time that have a higher chance of featuring in the exams? That's all.
Yeah. Yes, I think there are about 30 of them. Once you cover those 30, you are you're fine. Okay, now wait, let me first of all ask a question. Are you did you join us today for the first time?
Okay, yes, this is my first time of joining you this AA session, sir.
Okay, so yes, there are popular standards and there are other standards. I will not say there's any unpopular standard, okay? Because a few diets ago, 2 diets ago, they tested IAS 41 agriculture. Okay? They've tested some standards that are not so popular, but they can test at any time. But as you said, there are more popular standards. Now, there's a study note that we share with our students in AAA class, which consists of explanation of some of those. So what we did was to rank the standards in terms of high priority, medium, and then we summarized the notes. It's about 50 pages, okay? So that has been shared with the students. So I would obtain necessary approval from management, and I'll consider if we can as well share with you guys, okay?
Okay, thank you very much, sir.
All
Really
right.
appreciate it.
Next thing. Analytical Procedures. Powerful guy. Powerful guy. Analytical Procedures. Now, analytical procedures can be performed at the planning phase, the substantive phase, and at the review phase, as you know. And there are different objectives. In a past question, they ask candidates to state, explain the purpose of analytical procedures at each stage of an audit. Now, one of the things you need to know is, when do you use analytical procedures? So you need to go back to your study notes to identify those situations where the extent of use of analytical procedures is increased. Because there are some things that you cannot use analytical procedures to audit. While you can use analytical procedures to audit warranty provision or revenue or recurring line items that have a pattern, you cannot use analytical procedures to audit something like classification of investment in purpose. Okay, so you must know when to use analytical procedures, and don't give a vague answer, as we have said earlier. There's nothing like I'll perform analytical procedures to something, confirm this. No, state the particular procedure you will perform. What will you compare with what? What will you agree with what, in order to check whether it's reasonable? Finally, common sense. Some procedures will only come to you, or some procedures are consistently relevant as a matter of common sense. The entity has just introduced the share-based payment transaction. What designed the procedures to be performed on the share-based payment expense in P&L? The entity has just introduced a defined benefit plan for its employees. Blah, 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 blah. Design the audit procedures to be performed on the defined benefit obligation. The entity has just entered into a revenue contract with a customer, which will be for 5 years. The terms of the contract are the design procedures to be carried out on auditing the revenue contracts with the customer. Common sense demands that the first thing is to obtain a copy of all these contracts: the share-based payment, the employee benefit, defined benefit, the revenue contract, to understand the terms and conditions. The government grants too, you obtain the grant document to understand, read and understand the terms and conditions. The loan that the entity has taken, common sense demands that the first thing the auditor should do is to obtain that document and understand it. The claims, legal claims that are being made by external party against the entity, common sense demands that the first thing is to understand the basis for the claim. So certain procedures will only come as a matter of common sense. Questions that relate to payment of cash or receipt of cash, common sense determines that you should check bank statement, cash book, to confirm that payments have been made or have been received. Questions that relate to decisions that has to be made by management or the board, common sense determines that you review minutes of board meetings. So certain procedures are a matter of common sense. Auditing a tangible asset, common sense demands that you do physical inspection. All right, I'm sure you understand what I mean. Next, audit matters and evidence. Audit matters and evidence. Audit matters and evidence. This is another powerful question, quite consistent as well. Okay, format is often similar, but then there may be little variations. The more popular format is the first one there. Comment on the matters to be considered. Explain the evidence you should expect to find while reviewing the working papers of so. While reviewing the working papers of so. So very important, very, very important. Very, very, very important. Very, 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 very important. Matters to be considered, evidence you should expect to find. See how the second one is structured. In respect of development cost and trade receivables, comment on the sufficiency and appropriateness of the audit evidence. That is, meaning they would have presented you with the audit evidence obtained by the team. Meaning the onus is on you as you read the scenario to identify the evidence that have already been obtained by the team. Then you will now answer the question on whether you are okay with the sufficiency and the appropriateness of the evidence. Recommend the actions to be taken by the auditor, including further evidence which should be obtained. If, for example, you are not excited about the sufficiency and the appropriateness of the evidence that they've made reference to regarding the development cost and trade receivable, then you will now say, okay, though they've obtained this, but I think in addition, for this evidence, body of evidence to be sufficient and appropriate, they need to also obtain this. So for development cost, for example, the team might have agreed cost incurred on that asset to bank statements, verifying the carrying amount and the amount expenditure incurred can be reliably measured. But they've not obtained any evidence regarding scientific trials and the outcome of those tests, which checks technical feasibility. They've not obtained any evidence about result of market surveys, which check probable inflow of economic benefits. They've not obtained any evidence about management intentions, such as minutes of board meetings or finance loan application to fund the development. You may need to bring it out. So you see where I'm coming from. Third one, explain audit evidence in respect of the cash flow forecast, which you would expect to find in your review of the audit working papers ongoing concern. So you see, another, still the same style, but, you know, testing different areas. So they've presented candidates with a cash flow forecast. Maybe they even need this cash flow forecast to obtain a loan, as the company may be facing going concern problems. Maybe you have even been asked to provide negative assurance on the cash flow forecast. What evidence will you need to support these projections? Depending on the line items that make up the cash flow forecast, what evidence will you need to support it? If, for example, you see rental costs already there for 3 years, you need the rent agreement that demonstrates the period of the lease, whether that rent agreement has any variable elements or the fixed price have already been agreed for the period. Again, I ask your question.
Can you help with a clear distinction between the actions to be taken by the auditor and the further evidence?
Okay, so the second one, right? Recommend the action to be taken by the auditor, including further evidence. Yeah, so action to be taken by the auditor may include things like the procedures you will perform related to the scenario. So it all depends on the scenario. So the action could be you need to discuss with those charged with governance, for example. The action could be you need to discuss with the experts or the solicitors. It depends on the scenario. You know, but yes, I agree, you have to state those actions and then state further evidence that may be required. So that question may actually be 2 in 1. Okay, so the next question is, Shay, if they ask me question on matters to be considered, how do I structure my answers? If they're asking me for evidence you would expect to see, what should I take note of? Unfortunately, I can only help you with the structure, what your points you look at. Content will depend on the scenario they've asked you. That's what I remember one day, someone was talking to me about, hey, See, I already know all these things we talk about structure. But is that, what should I be saying? Gone, gone. There's a limit to the extent to which any lecturer, even the examiner himself, can help. Some of the questions you're answering now, they've set them 2 years ago. They're already in the question bank. So there's so much controls around which particular one they are going to pick, mix of questions they will pick. Every paper has an assessor, there's an examiner, there's one other person, I've forgotten the name now. So today they may be asking you evidence related to financial instruments. Tomorrow they may be asking you evidence related to investment property. Another day they may be asking you evidence related to oil rig. There's no, you just need to know how to fish. It's impossible to give you all possible evidence that you may need. All right. So, matters to be considered. Now, please take note. When I say matters to be considered, I'm talking about matters to be considered in respect of a technical accounting and audit issue presented before you. Okay? It's not matters to be considered. It's not anywhere you see matters to be considered. You will just assume what I'm saying here is what is relevant there. They've told you about an ethical issue. They now say, what matters will you consider as the auditor related to this issue? You are now saying materiality, accounting requirement. No. The fact that they've said matters to be considered does not mean you must quote all the things that I want to talk about. The matters to be considered that I'm talking about here is in respect of accounting issues presented to you. Again, number one, materiality. You need to assess whether the item is material. What are the principles that I need to know here? Number one, compute it, compare, and conclude. You must fulfill the 3 C's. Number two, materiality, remember, may be quantitative, or qualitative. Number three, remember the benchmark, 0.5% of revenue. If it's more than that, it is material. 5% of PBT. If it's more than that, it is material. 1 to 2%. I would actually say just use 1.5%. 1.5% of total assets. It is material. Okay? 1.5% of total assets. Next. There's something in my mind that just dropped on my mind now, and I wanted to say no need. Let me move on, but it came back again. So let me just say it. You may face a question on materiality that is testing your knowledge of practical issues around materiality. Materiality is a very, very deep concept in audit. It is so deep that most of the AAA question does not go deep into the issues related to materiality. Okay? Usually, accounting standard says materiality should be set at a minimum of 2 levels. But even in practice, it is often set at 3 levels. There's materiality, which is called the overall financial statement materiality. There's materiality at the account balances level or transaction level. Different names for that one. And there's another materiality for unadjusted errors, which some people call performance materiality. Now, what I wanted to emphasize is this. Sometimes when you do 5% of PBT, it may not be the PBT. It may be the normalized PBT. When I say normalized PBT, what do I mean? When you look at the income statement of a company, it may be the case that certain line items are there that are one-off. E.g., the company might have made a huge profit because they sold one of their assets at a huge profit. Or there was a one-off grant that they got, which they are unlikely to get again. So sometimes you may need to normalize the profit by taking out all those, non-recurring events. That's one. So it may not just be the exact PBT, but for the exams, most times you just pick what the examiner has told you. But I'm just saying, in case they want to stretch that area further, they may want to ask you some questions related to the practical side. Then another thing is, sometimes you might have noticed an obvious error in the financial statement, which, for example, might have led to understatement or overstatement of profits. A factual misstatement. Remember that misstatements are of three types. If it's a factual misstatement, and is significant, if that is corrected, what happens to your profit? Your profit may go up, it may come down. And that means your materiality level will change again. And that may mean that some matters, some account balances that you have concluded to be immaterial may now be material. And you may have to now carry out extended procedures. That's another practical issue. Okay, then in real life, materiality is not often these absolute percentages I've given to you. For example, total asset is 1 to 2% of total assets. So there are factors to be considered in determining, should I pick the lower range, which is 1%, which means I will do more audits? Should I pick the higher range, which is 2%? Okay, so there are factors that would influence whether you pick the lower range or you pick the higher range. If it's a listed entity, for example, highly regulated entity, for example, first time audit, for example, they have a loan that they have obtained, significant loan from specific buyers, lenders, for example, you will often tend to pick the lower range. But if it's a low risk client, you may often tend to pick the higher range. So those are additional, practical issues just beyond just picking the rate and using it. All right, what else did I want to say here? Then use the appropriate benchmark. So that's the one I explained earlier on, that whether it is what's the name? Whether it is against total assets, against POL, against the revenue and all of that. So use the appropriate benchmark. Number 2 is to establish whether there's a misstatement. So actually the name I could call this second one is misstatement. Because the main thing you want to check is there a material misstatement? But instead of calling it misstatement, I'll call it accounting requirements. Accounting requirements. Accounting requirements. So Sheyi, what should I do under this area? Accounting requirements. Number 1, you should recognize that the objective is to check whether a misstatement exists. And remember that a misstatement can either be factual, judgmental, or what? Projected. So it's to check whether a misstatement exists. Number 2, the way you check whether a misstatement exists is to state and apply, capital letter, apply relevant requirements of IFRS. Okay, you state and you apply relevant requirements of IFRS. Now, your conclusion may be that the company has done the right thing. So don't be shy of confirming that, okay? Or your conclusion could be, okay, they should have assessed this thing for impairment, but they have not. Number next. Please, the word relevant is very important. This is not an exercise where you regurgitate everything you know about the standard, but you must restrict it to the relevant section. Number 3, reporting implications. Reporting implications. So what am I to do here? Number 1, this is only relevant where there is a material misstatement which you would have established from this and this, okay? Or scope limitation, which the scenario may tell you. Usually it's the first one, material misstatement. Do not import material misstatements. So if there is no material misstatement, there is no material misstatement. Don't create unnecessary scenarios and assumptions because you want to talk about reporting implications. But if there's a material misstatement, discuss the important implications. Next, state the impacts on audit opinion. Okay, in fact, state the type of audit opinion you will give. Don't just say you will give a modified opinion. Next, state the impact on audit reports, e.g., the basis of opinion paragraph, emphasis of matter, whichever area it affects. Basis of opinion paragraph, for example, must be amended if you are giving a modified opinion. Next, state other reporting responsibilities. So what's an example of other reporting responsibilities? If you are recommending a qualified opinion, for example, you must have discussed it with those charged with governance. It's a requirement. By the time you do these things, there's no way you won't earn the full marks. Finally, number 4, other considerations. Remember, we are talking about matters to be considered. So other considerations. It's not mandatory that other considerations must come after reporting implications. Sometimes other considerations may be, merged with the accounting requirements section. So other considerations is where you show your skill related to any other item that you consider relevant for the audits. Other considerations. Finally. No. One more thing. Evidence. So where you are asked to select evidence, this is one of those difficult areas that is just like saying audit procedure. What do you want to say? It's a function of what you are asked. That's why question practice. I did not say question reading and answer reading. No. Question practice helps. When I wrote this paper, this question, matters and evidence, in our time was always question 3. Question 3. Question 3. So I wrote it in 2006 or so, June 2006 or June 2007 or December 2006, can't remember. Now, the syllabus during that period started December 2001. So from December 2001 till June 2006, which is about 10 diets. I had those 10 diets that I could use to check how they've been testing the area. So since we knew it was always question 3, one day I decided to go through question 3 for the entire 10 diets. I did 6 by reading, reading the answer, knowing the pattern, 6 of them, first 6 diets. The remaining 4 diets, once I pick the question, I will write it out. I will now compare with the answer. Pick the next diet. So I did that for the remaining 4 diets. By the time I consolidated my knowledge of the entire 10 diets, the back of my notes, I can still picture it. I just can't find the note again. The back of my notes, I had listed a very long list. It's all those long notes. A very long list in 2 sections of popular evidence, that I think are of recurring value. Very long list there. So I was ready for question 3. I was ready for question 3. Yeah, because by the time I was getting to the 10th diet, as I'm already reading the scenario, I'm already having an idea, okay, this one, because sometimes the evidence is even in the scenario. Oh, okay, they said this person is claiming, okay, I need a copy of the claim. Oh, this asset is insured, you need the insurance cover, insurance contract. Oh, you entered into a lease, you need the lease contract. I can already picture and pick it easily because of practice. Another area too that I was comfortable with was risk. By the time I got into the exam hall, since December 2001, hear what I'm saying now, till last diet, last March, my diet was the only diet they did not test any type of risk. There was no audit risk, no business risk, no risk of material misstatement. Thank God I had other risk management techniques that I've put in place. So immediately I opened question 1. It was a question on group audits, and it had nothing to do with risk of material misstatement. Was it even group audit or PFI? I think it was PFI, Prospective Financial Information. And I checked question 2, no risk. Immediately I jumped to question 3. And that was the first one I started with. Before I now came back to ethics, reporting, and then went back to the PFI question. So you must have your own strategy. Okay, now go ahead with your question.
Sheikh, sorry, on your previous slide, you said material misstatement and SL. Sorry, I didn't get what SL stands for.
Scope limitation. Scope limitation. That's what we call inability to obtain sufficient and appropriate evidence. So evidence, best I can tell you is number 1, very popular mistake, not audit procedures. Some people are asked to state evidence and they will be stating procedures. If I subject this entire class to a test now on this thing, 50% at least will make this mistake. Not audit procedures. So this one is English. Structure your points to ensure you are talking about what? Evidence, not procedure. Next, the scenario. The scenario will usually have some evidence or indications of evidence that you can pick from it. Next, avoid ambiguity, vague answers, vague evidence. You need to avoid vague evidence. Next, state the purpose. So when I say vague evidence, for example, you say evidence that the asset is insured. What is holding you from writing insurance contracts itself? Evidence that the company paid $10 million to acquire the company. What is holding you from stating the particular evidence that will show that we've paid $10 million? Purpose. Don't just say minutes of board meeting. Minutes of board meeting showing a copy of the insurance contract detailing the extent of cover and the period covered, and the amount to be reimbursed in case of, the insured event happens. So ensure you state the evidence with its purpose in that statement. It's not just, bank statement. What is the bank statement? Why do you need the bank statement? You should put it there. And it is not obtain a copy of the bank statement. It is actually copy of the bank statement. You obtain there turns it to a procedure. Audit completion, review, and reporting. This is our final area for this review. One question will always predominantly, this is the AA examiner speaking, not Sheyo. One question will always predominantly come from syllabus section E. And consequently, candidates should be prepared to answer a question relating to completion, review, and reporting. Now, hear this. The examiner says, there are a number of formats this question could adopt, including but not limited to, disclaimer. Number one, requiring candidates to assess going concern. So they could give you a company's financial information, give you additional information, and ask you to assess what are the indicators that this entity may not be a going concern. What are these, what are that? Okay? Two, impact of subsequent events. They may give you a scenario. In that scenario, there may be issues related to adjusting or non-adjusting events that they will want you to decide, and even state the procedures the auditor will carry out related to that. If you remember your notes on subsequent events, there are 3 levels. Events discovered, occurring and discovered before the audit report is signed. Events discovered after the audit report is signed but before it is issued. Events discovered after the financial statement and audit report have been issued. The auditor have absolute responsibilities on the first level to carry out procedures to detect events that may require adjustments or disclosure. But for the second and third level, the primary responsibility lies with management. So they may give you a scenario related to the first level and ask you what further actions or procedures will the auditor carry out. Next, which is very popular, evaluating identified misstatements. This is where they will give you short scenarios and tell you to evaluate the accounting treatment or the event to determine whether there's a misstatement and tell us what further actions you will take where you conclude that there's a misstatement. They may even ask you to state the impact on the audit report. which is what corresponding effect on the audit report. Another format it could take is candidate may also be asked to critique audit reports or evaluate matters to be included. Sorry, cut that here. Evaluate matters to be included in a report. And this report may be a report to those charged with governance. So you can see the examiner herself stated number 1, it could be this format. Number 2, it could be this format. Number 3, it could be this format. Number 4, it could be this format. Number 5, it could be this format. And number 6, it could be this format. You see that? So look at this requirement, for example. From the information provided above, recommend the matters which should be included in EDICO's reports to those charged with governance and explain the reason for their inclusion. That is an example of number 6. It's giving candidates scenarios, issues, and what will you include in your communication to those charged with governance, and why are you including them? 15 marks. That's not small. So you don't answer a question like this just giving opinion, view, or just going straight to conclusion. You pick the issue. You pick why the issue is important. You discuss why it has to be communicated to those charged with governance. Another one says, critically appraise extract from the proposed audit report of Goodman Group for the year ended 31st March 2004. Another classic example of number 5 up there. Another one says, discuss the implications for the audit reports on the basis that no further adjustments have been made to the financial statement in relation to the investment property or shopping mall. You see that? Impact on the audit report. So that's a classic example of number 4, if management refuses to adjust. I'm sure you get the gist. So, Sheyi, do you have anything to tell us on how we should approach this area? Oh, yes, I do. Majority of what I will tell you is the work you have to do in the next 2 weeks to make it easier for you to pick the easy marks. Number 1, your knowledge must be sharp. This is an area where if you are not on top of the requirements of the auditing standard, go back to your study notes and text and be on top of it. So revise going concern as a topic, revise subsequent events as a topic, short topics anyway, revise opening balances as a topic, revise other information as a topic. Those 4, even if you are dreaming and they wake you up in the dream, meaning you are still dreaming, you should be able to explain auditors' responsibilities and management responsibilities. Auditors' responsibilities, okay, management's responsibilities, and then reporting implication, even if you are sleeping in the sleep. Good. Next, what's the next thing that I should do? Go and comb these 2 standards or areas, external auditors' reports and reports to those charged with governance. Those 2 topics, you have no business in the exam hall. if you are not on top of them. Carry your text, carry your lectures, whichever one material you're using, and ensure you are on top of those two topics. External auditors report, meaning you will cover ISA 700, ISA 701, ISA 705, and ISA 706. Report to discharge the governance. ISA, is it 250 or 260? One of it, okay, 260, I think. So cover that as well. Very important. Number next, if you are asked to critically appraise an audit report, which is a popular question, critical appraisal of audit reports. You are supposed to check that report for appropriateness of certain things. Number one, appropriateness of wording. Wording. The English, the way the report is written, does it make sense? The things they've written there. An audit report, external audit report, is not the same thing as an internal audit report that you can choose to use the format the organization prefers. ISA 700 tells us how an audit report should be worded. And obviously, even though, you know, the standards can never prescribe all possible scenarios, but it gives guidelines on how reports should flow. So the wording, you can't just accuse management in an audit report. You can't just say things that would imply that you are giving an absolute 100% assurance. So you need to look at the wording of the report. You can't say things that would imply that you are auditing the area that you are not responsible for. For example, imagine if the opinion says, we have audited the financial statement of ABC Limited, which include statement of comprehensive income, statement of financial position, chairman's statement, statement of cash flow, statement of changes in equity. The examiner expects you to bring out chairman's statement and say, no, auditors don't express an opinion on chairman's statement. Number two, appropriateness of structure. It is fundamentally important for you to ensure that there is order in an audit report. Order, O-R-D-E-R, in an audit report, because it must follow a particular order. You cannot put emphasis of matter paragraph before the opinion. You cannot put responsibility of auditor before responsibility of directors. You cannot put order matter paragraph before basis of opinion paragraph. So you have to know the structure of an unmodified, and that is this COBMKORAONSAD. That is the structure. Title, opinion, basis of opinion, material uncertainty related to going concern, if relevant, CAM, order information paragraph, responsibility of management, auditor's responsibility, other statutory reporting obligations, name of the engagement partner, if it's a listed entity, signature of the auditor, address of the auditor, date of the audit report. And then where you have EOMP, other matter, you must know where it should be inserted. Beyond that, structure is not just talking about ordering of this thing. Structure is also saying what should be in a particular paragraph. For example, if I'm talking about going concern uncertainty and the fact that the entity has disclosed it in a particular note under CAM, then you should know that you are dealing with a candidate that has not attended lectures at Ivy League, because a candidate that has attended lectures at Ivy League will not be discussing going concern issues under CAM. You pick basis of opinion paragraph. Normally, your basis of opinion paragraph should tell you the auditing standard you have complied with, the ethical standard you have complied with, and a confirmation whether sufficient and appropriate evidence have been obtained. But you know that the moment you give a modified opinion, there are additional things that must be in your basis of opinion paragraph, such as the substantive reasons for your modification, why you are giving a modified opinion, the areas of the financial statement that this misstatement or scope limitation affects, and a quantification of the effect, if possible, or a statement that is not possible to quantify. So all those things stop. So if any of those things now, they now go and present it in another paragraph, as a student that have attended lectures at Ivy League, you should be able to identify it. Next, appropriateness of opinion. Sometimes you may have to argue against the opinion recommended by in the draft. So for example, they've recommended a qualified opinion, but you believe it should be an adverse opinion, or they've recommended a qualified opinion as a result of material misstatement, but you believe the issue here is not material misstatement, it's because they have not granted us access to minutes of board meetings and the result of scientific trials and tests of the items that they are developing, because they say it is sensitive. So you are dealing with qualified opinion as a result of scope limitation, not material misstatement. You may have to debate that and put down your argument, not just conclusion. I say that again, put down your argument, not just conclusion. Next, appropriateness of referencing. There are different ways referencing may be wrong in an audit report. It could be due to error of commission or error of omission. Commission, what do we mean? They say that IAS 8 requires that when there's a change in policy, it should be this, it should be that, without saying the full title of IAS 8. Or they said that the note to the financial statement explains a going concern uncertainty that the entity is currently facing related to regulatory blah, 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 without stating the note reference number. Referencing must be appropriate. Or sometimes they may even state a note number that is not appropriate. Or they may say the chairman's statement stated so, which is not consistent with the financial statement. Meanwhile, that thing is not in the chairman's statement. It's in the social and environmental report. referencing is important. Finally, appropriateness of, what's the final one? I've forgotten. What's the final one? What's the final one? Eh? Nobody knows it in the class.
Appropriateness of language.
Language. Language call. English name.
Heading.
Heading. Heading. Language is the same thing as wording, okay? All right. Heading. What is this talking about? Titles of the various paragraphs in an audit report are important. Now, listen to this and listen very well. What did I say are important? The title that you use for the heading of various paragraphs. You can't just write it anyhow. For example, your opinion paragraph is called opinion when your opinion is unmodified. But the moment your opinion is modified, then the title of the paragraph must reflect the type of modification. So you either call it qualified opinion, or you call it adverse opinion, or you call it disclaimer of opinion. That's one example. Another example is your basis of opinion paragraph. The basis of opinion paragraph is titled to reflect the type of modified opinion where you are giving a modified opinion. So something like basis for qualified opinion, basis for an adverse opinion, blah, blah, blah. Another example, other information paragraph is called other information if there is no problem when you have reviewed other information. But if you review other information and you identify a material inconsistency, you must change the title of that paragraph to material inconsistency in other information. Francisca, ask your question.
I wanted to ask about that reference part.
What happened to it?
You said that if they state the reference wrongly, they are meant to correct it. So does that mean that we are meant to know all the references available?
Well, I don't know what you mean by correct it, but for you to have been able to identify that a referencing is wrong, then you must know the right thing. Oh, or are you talking about the one I talked about on standards, the IS 8? And
No.
Yeah, so for you to say, okay, so for example, if they just say a note in the financial statement explains so, without saying note 13. So your own correction is just to say that they should mention the note number.
Okay.
Yeah, that's what I mean by correct. Edna, do you have a question? Okay, you've lowered your hand. Yeah, so that's for critically appraised audit reports. What about questions where they ask you to deal with, an ethical, not ethical. They've given you misstatements. Okay, they've given you not misstatement, they've given you transactions, and they say you should discuss, evaluate the accounting treatment of the transaction. That one, there's really no much stories there. You have to know the accounting standard. You have to understand the scenario given to you, and then start writing. I still have one more thing. Oh, okay. This one, I will do it when doing question practice. So, let's read this statement. I thought I was done. See what the examiner is saying about question 1. CO. Section A will comprise a case study worth 50 marks. set at the planning stage of the audit for a single company, a group of company, or potentially several companies. So first thing, as a candidate, I will know that, okay, it seems the examiner is committing to the fact that it will usually be at the planning stage. We know that already anyway. And it could be single, it could be group, it could be potential. Next, candidates will be provided with detailed information, which will vary between examination, but is likely to include extract of financial information, strategic, operational, and other relevant information for a client's business, as well as extracts from audit working papers, including results of analytical procedures. Now, hear this. Candidates will be required to address a range of requirements, predominantly from syllabus section A, B, C, and D. So, very important. Now, even though the examiner said predominantly A, B, C, and D, I say predominantly B, C, D. If you now ask me, shall you narrow it down further, I will say predominantly B and D. But really, it's more of BCD. Okay? But who am I to say that when the examiner said A, B, C, D? So please go back to the syllabus sections and know what they represent. Regulatory environment, professional and ethical issues, practice management, and then audit of historical information. Those are the sections. Thereby tackling a real-world situation where candidates may have to address a range of issues simultaneously in relation to planning, risk assessment, evidence gathering, ethical and professional consideration. Please note that other syllabus areas, excluding E, this is a commitment. E, section E will never be tested in question 1, may also be drawn as part of the case study. So other areas may also come, but predominantly it will be those ones identified up there. So this is a sample 50-mark question. I actually think it's the question we are doing today. Yes. So when we are doing the question, I will emphasize the things I need to emphasize. What are the other areas, Sheyi, and what are the how to answer questions on those other areas? Yes, these are the other areas. Go and read those ones on your own. Okay? Those are the other areas. Make sure you are on top of them. For example, as a candidate, this is what I would do. I will quickly carry, whether it's my text, whether it's a video lecture that I trust, whatever it is, quickly carry it. What are they saying about due diligence? I will read it and I will understand it. Then I will look for 3 questions on due diligence. Quickly check them out. Then I will jot down my takeaways. Then again, PFI. What are they really saying on PFI? Because it's going to be one of all this. Most likely they will not test all of this. I doubt if there will be any 2 of this that will be tested in any diet. It will usually be one of this other areas. Like PFI, what is my note, text, or video, whatever it is saying that you trust, okay? You don't just listen to anybody because there are lots of videos flying out there now. We really don't know who is saying what. You don't even know whether the person teaching has passed the exam, you know? Anyway, so you check what the concepts that I need to know are the syllabus. You find 3 questions again on PFI. You put down your takeaways. These are the things I need. If they ask me cash flow forecast, how is it different from if they had asked me profit forecast? What are the factors to be considered before taking on an engagement to examine prospective financial information? You know, you ask yourself those questions, you put them down as your takeaway, okay? And you do the same for the other areas. Thank you very much. I think I'm done with my first section. It has definitely taken me more than I expected, but I hope that you picked a couple of things from it. I do hope so. So It's effectively 1:25 now. Let me quickly check my timetable to see what is next. Okay, I know what is next. I know what is next. So what we have next now will take us to 1:30. And by 1:30, we will go on break. And then when we come back, we move straight away to our question practice section. So let me quickly use my remaining 5 minutes properly. Any question for me? Any question for me? Any question? No question? No question? No question? No question? Okay.
Sorry.
Yes, go ahead.
Okay, please. It's not a question really. I just want you to help me go back to the slide before other areas.
Okay. This one?
Mr. James, Mr.
No,
Shensha,
no. One with 10.
Sorry, what did you say?
Yes, this one. Okay, and the next, please. So sorry.
The
I just
next one
want to-
after this.
Yes, before this. Okay, okay. Thank you.
Yes, another person was talking. What is that?
sorry, Mr. Shea, I wanted to know the time I come back from break.
Yeah, I will let you know. But let's even go on that break first. Or let it be time for break first. It's not yet time.
Okay. Good afternoon, Shay. I have a
Good
question.
afternoon. Are they doing? How are you?
I'm fine, thank you. This had been a very interesting session, and I'm really, really happy that I joined. My question is on ratios. Now, usually when you have your financial statements in the account, in the exam, they give you notes. Now, I was thinking this notes should be a guide to the ratios that you should be calculating. What's your comment on that?
Usually, sorry, I'm so sorry. There's something I missed in your question. Can you come again with your last couple of statements? Usually they do what?
You have notes to the financial statements in the question. And now these notes, are they not supposed to be guide to the ratios that you should be calculating in the exam?
Very good point. Yes. The notes should actually, guide you on the direction of your ratios, okay? But as I've said earlier, whether you calculate a ratio, I classified the usefulness of ratios into 3: useful, useless, irrelevant. No matter the section it falls into, you will still get your mark for the ratio you computed, okay? But as I said, maximize the ones that will enable you explain further audit risks that you are seeing in the notes. So it then makes sense to use the notes as a guide to knowing what ratios you should focus on. If the note indicates there may be potential liquidity issues, calculate liquidity ratios. If the notes indicate that there may be issues around high level of borrowing or new borrowing during the period, calculate gearing ratios. If the ratios indicate something around tough environment or high competition or profitability is falling, calculate profit ratios. Okay, I hope that is clear.
Very well,
all right.
Thank you.
Yeah, okay. So let's quickly go through this 5 minutes. As I said, if I don't do it, I'm going to be fired, okay? So that I get paid for my lectures, I need to do this. So I know that about 50% of the class, or 40% thereabout, are joining us for the first time. welcome. If you are joining from Kenya, from South Africa, from Mauritius, from Abuja, from Ibadan, from Ghana, welcome. This is Ivy League. We are a platinum ALP since 2017. And that means that we have been able to consistently meet the accreditation requirements for platinum. And that's a lot, actually. For example, you have to exceed pass rates in 75% of your papers consistently, exceed global pass rate. Our tutors are highly skilled and experienced, combining several years of experience in teaching ACCA papers. When you put this together, it's well over 300 years. So you are not on this journey alone. Our students are consistent award winners, particularly the national prize. So when we have ACCA award nights, our students and tutors are typically high performers, particularly top 3 students that they often reward. Our teaching methodology and discipline, is really our blue ocean, or what I would call our differentiator. So if it's time for lectures, it's time for lectures. If it's time for revision, it's time for revision. You don't, have situations where people don't stick to the plan. Now, it may happen that I plan to teach ABC on a particular day and I only touch A and B, and I may fix an extra class for C. Those ones happen, that's really to help the students. But I'm talking about, discipline around completing syllabus, mock exams, revision, timing of and commencement of all those things. We offer online lectures, specifically live classes, okay? Because we believe that you don't get a lot of value from recorded classes. However, recorded classes are available, so the students want that. I often say that how many people really find fun in sitting down and listening to a 4-hour lecture, when you were not in the class. So typically live classes are by far better. We also have face-to-face classes for selected papers, and that is likely to expand as we see more ability to go out and, reduce social distancing, even though that's still a requirement now. Oxford Brookes University, if you are interested in the BS in Applied Accounting, obviously you can engage our pool of experienced mentors to mentor you through this project. And obviously you can also do that from wherever you are in the world. We offer lectures for CFA as well. In fact, we started lectures for CFA July for December last year, and our pass rate, our first diet was 100%. Okay, all the students that wrote the exams passed. We also offer lectures for ACCA Diploma in IFRS. Revision and marked mock exams are also inherently part of the offerings that we have. So for example, you are joining our final day of revision, which is over a 6 weeks period. Next ACCA session starts July 10th for those who are writing September. And if you are going to be saying bye-bye to ACCA after this diet, I pray that that bye-bye remains bye-bye, so you will pass your exams. But if you still have but if you still have other papers to write, then for September exams, our 8 weeks intensive revision will start July 10th. For December exams, we will start July 17th, which is just the weekend before release of results. August 1st will be our Oxford Brookes Open Day. Our fees are extremely, I don't even know why I use the word highly, extremely affordable. When you compare us with our competitors like BPP, Kaplan, you know that our fees are highly discounted. The average price of a skill level paper is about $75, professional level paper about $90 thereabout. So each class is typically for 4 hours. We run a 12-week cycle for lectures. So 13 weekends, 1 weekend as break in between. So 2 6 weeks period for lectures. And then, so typically we break during September and March exams. We break for 1 or 2 weeks. We do first 6 weeks, we come back another 6 weeks after the break. Then once we are done with the second 6 weeks, then it's time for revision, which is the final 6 weeks that ends tomorrow. Oh, I think some papers are still having theirs next week. We appreciate feedback, so please drop your feedback on the WhatsApp groups that you are on. You can also drop it on our social media page. As I often say, if it's a good feedback, please help us go there, drop it there. If it's a bad feedback, please chat me privately and let's talk. The phone numbers are there, and then that's our website and our email address. So you can always reach us through any of these means. So thank you very much. We will go on break now, and that will be for 30 minutes, okay? So let's be back, okay, 35 minutes. Let's be back by 2:10, which is 35 minutes from now. Am I correct? Yes, 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 35 minutes from now, okay? Thank you.